All right, what's going on, everybody? Happy Tuesday. Hope everybody had a great day and got a little bit better today. Um, so, yikes, craziness going on. Yeah, just absolute craziness in markets. Man, yeah, I don't even know where to start. So basically, I'm down to complete minimal position sizing. It was already little to start with, um, and now it's like as minimal as I would get before just blowing everything out. um, Position sizing has been really light for me over this last month. Um, because what my style is as things are working, I add to it, add to the position, and as things I start with about a third of a position size, and as it's working, I'll add to it, and if it doesn't work, I just get out. And I would say over those last 3 weeks or so, nothing has really been working. So, oh man, it's been a long stretch, man. Woo. So, I'm fighting bearish tendencies here, but I noticed here today in Nasdaq that this was a really long trend line that I really, really, really should have been paying attention to, and have seen that. And when this broke, just kind of get out of the way and let it do its thing. So I just kind of noticed this today. So this is since September that this trend line has been intact. Right? So that's a long time. Now, can things turn up? Yeah, sure, absolutely. And then, you need another trend to form, just same with this, in this area. Okay, so let's go over the position size, the positions, everything that I did, and then we'll go over kind of my thoughts of everything. And I'll do my best not to make this such a pessimistic video. But we'll just go over just the charts and my thoughts. So first of all, EA, I got out of EA. Yeah, I got out of this one. My average cost was $149.82. I got out at $144.81, which is a 3% loss. Now, what can we learn from this trade? So, this whole area, let's zoom in. So I had placed the trade maybe right here or something, or here. And this huge heavy volume I talked about, but gave it a pass because markets were really nasty then. And in hindsight, that's totally dumb to do. I should not have given heavy volume selling a pass. Just, that was bad. So now this could still totally work and move up. I wouldn't go after this until it was back over, let's say 150 or something like that. So now let's go over Palantir. So I said yesterday, look at this. Really unhealthy, not normal things are happening in this market. And it's been like that for a couple weeks, and it's very worrisome. But, shoot, this is down 7.8% today. And yesterday was down 5% or something. I forgot what it was. It's somewhere around there, 4, 5, 6%. Today, 7.8% down. That's pretty nasty. And I had set a close below this 21-day moving average, and I would get out. And that's what I did. I sold at $71.70. That would be for a 7% loss. No big deal with this one. I had about a 2/3 position size on this one. You know, uh, uh, I, I think in terms of what to learn from this one, um, this is one of the ones where I traded my plan and it just didn't work out, right? So, the entry point was good. Scaling into this position was good. Giving it, multiple days. You want to give your positions time to work. Um, uh, so, all in here. And this is what, again, indexes are selling off. This is showing really good strength in here. Both of these days, really good. And then here, boom, great strength. And then just these next, 2 days, just horrible weakness. Now, long term, if you're more of a long term investor, I don't know if I would even care, honestly. Um, so, yeah, I mean, that's all I have to say about that. Now, there is a gap to fill, all the way down here, and this gap will be filled at some point. Who knows if it's going to be, in a month or a couple years or 5 years, 10 years. But anyways, okay, let's look at this at a weekly chart. Yeah, you see, I mean, clearly this is rolling over. This trend line here has been broken. So moving on, that's just one, and sometimes positions, they won't work, and that's what we're looking at here. So in terms of any mistakes that were made, I for how I trade, this is not a mistake. EA was a mistake. So cut losses, move on. All right, now going over to, well, let's just stick with equity positions here. So CCJ, I mean, look at this market. I mean, this is like the weirdest few weeks, like just so strange. Yeah, I mean, like what? Anyways, so average cost $42, $52.42. It's currently right here. Still thematically, I like this. So that hasn't changed. However, if indexes are rolling over, then so too will, this and other equities as well. So let's look at this on a weekly. We'll see how this closes this week. Moving on. All right. So Goldman Sachs still in this, had a pretty good sort of day. Nice recovery today. 459 is the average cost basis. This is, 580 here. I still like this. However, if indexes are going to be rolling over from here, I will be getting out of everything. So, I would get out of this as well. Now, Taiwan Semiconductor. Just like, and this has a gap to fill, so I expect that gap will be filled. But man, so anyways, average cost basis 207, 11 cents. Nvidia today, I mean, look at this, down 6%. Whoa, that was after hitting an all-time high. I don't know if I knew that. So then, therefore, the swing of this was probably 7-8% to close down 6% after opening the day up. Wow. Craziness. Let's see how AMD did. Okay, let's look at Broadcom. Broadcom looks good-ish. It looks good. I mean, it's like, down 3.3%. It's just, I don't know. It's in a clear uptrend. Is this a consolidation for a move higher? Time will tell. All right. And then I'm still in my NASDAQ position. But again, very, very minimal. And I had noticed today, I don't know if I was talking about this earlier or not, but this trend line right here since, September has been broken. And this is sitting at the 50-day moving average. So anything below the 50-day moving average, and I'm out of there. So those are the leverage that TQQQ February 21st is the expiration, $82 strike price. 504 is the average cost. Those are currently 580. And then the ones that I added yesterday, March 21st expiration, $85 strike price, $840. It's the average cost. Those are currently $620. So that's all the positions. Oh no, IBIT. Man, see again. So then you have Bitcoin down 6%, right? So you're getting real sort of abnormal moves in markets these last couple weeks. Very abnormal. And I've been talking about how this pullback, since Christmas or whatever, or before Christmas, I've been talking about how this is not a normal pullback in markets. So that's the first thing that kind of piqued my bearishness is, these aren't normal. And yes, obviously things can rocket higher, just like here during the summer. Like all of this right here, that was nasty and violent and not normal. And sure enough, things turned up. But let's look at a normal, healthy pullback. So right here, this is all normal and healthy. Nothing crazy. Moving sideways after a nice move up, kind of pulling back and letting the moving averages catch up for its next move higher. This is also a total normal and healthy pullback, which paved the way for another move much higher. So, this even right here, nice and normal pullback. Here, same thing, right? So what we're experiencing this last month is not normal. Again, yes, this can rocket higher. It's on the 50-day moving average. We're in a bull market, but things are starting to break. And we'll see if they can fix themselves. Okay, so oh shoot. Anyways, back to Bitcoin. Man, what a nasty day, man. So those are February 21st. Its expiration date. $54 strike price. 580. Those are currently 507. So, and I was concerned about this area yesterday. I was talking about this area of serious concern. And, same thing with equities as well, with indexes. Making that video yesterday, I'm like, it's not feeling so hot. So basically, total minimum position sizing, like as minimal as it gets. And so now let's kind of talk about things here. So we can see here that NASDAQ has broken its uptrend, and it's sitting at the 50-day moving average. So it's hanging on. Let's look at some of the major players here. So again, I mean, yesterday this looked great, and then just gets completely booted. Meta, so Meta was up 4% 2 days ago, and looked great, looked primed for a breakout, which it still can. Meta looks fine. Let's look at Microsoft. Yeah, see, rolling over. Like, you guys, if this 200-day moving average gets lost and rolls over, that is bad news for the whole market, So, like, here we can see, okay, a break below the 200-day moving average, and right away you don't have to be concerned necessarily. It takes time, right? So then, but eventually just everything started rolling over, and then sure enough, we enter a nasty bear market. 2022 was nasty. So yeah, I mean, it's just something to watch out for. So Meta, Nvidia, we looked at Nvidia. I mean, that's craziness. Apple. Yeah, see, I mean, so the optimist in me wants to say, okay, so we're in a bull market. This is sitting kind of right where it broke out from a beautiful long base. 50-day moving average is moving up. And, if you want to be sort of pessimistic about this, you can clearly see how this is rolling over. So now, okay, that's Mag 7, I think. Oh, Google and Tesla. Yeah, see, Google's looks good, right? I mean, we're really close to highs in Google, so that looks good. And then Tesla, how does Tesla look? Down 4%. Yeah, see, I mean, here, this is what could turn out to be a bear flag. So, that's starting to look a little bit weak. But, some of these, they do still look good. Just things right now are tough. So, okay. So there's that for NASDAQ as well as Mag 7. NASDAQ is the only index that's hanging on here. You've got S&P 500 that has now closed below the 50-day moving average. And yes, if this rolls over, that is not good at all. Let's look at this on a weekly chart. So the weekly chart looks okay. But as of now, this isn't looking good. This is kind of like a wait and see. We'll see what happens. Anything can and does happen. But as of now, all we can go off is what we can see right now, and it's not looking good. So then we'll go over to Russell. This has been below the 50-day moving average for a while. When this break through this 50-day moving average, saying this is not good and completely, totally not normal. So yeah, this is not healthy market behavior here. Now we'll go over to Dow Jones. See, same thing, right? Yes, this can turn up, but same thing. It's so. For example, right here, do we know if this is the end of the bull market right now? No, we don't. But if you sell and you cut your losses below whatever levels that you have, I'm a 50-day moving average, I'm out of there. You will miss the bear markets. So for example, right here, same thing, right? Close below the 50-day moving average, and then maybe you can kind of wait, and then boom, you're out of there. And you don't know, is this the end of the bull market here? You don't know, right? It was not. However, you will miss bear markets and huge drawdowns, right? So back here, below the 50-day moving average, you can kind of get out. Maybe you're kind of using the 200-day moving average as a guide or whatever, but all right here, boom, very, very, violent, heavy selling through the 50-day moving average, through the 200-day moving average. Do you know that was the end of the bull market? No, you don't know that at the time, but you protect yourself in the event that it is. And sure enough, it was. So, and you would have been completely protected from all of this. So, am I saying that this is the end of the bull market? No, I'm not. But this is a no-go zone. Below the 50-day moving average, especially living below the 50-day moving average, this is no-go. Same with Russell, same with now S&P 500, same thing, below the 50-day moving average. This is a no-go. So the last index that is holding on is NASDAQ. Below the 50-day moving average, and I'm out of here. So now let's go through some sectors. So we've got some stuff seriously breaking down. So first, let's start with bonds. Bonds are breaking down. Yields are blowing out, and that is serious trouble. This is serious trouble for so many different things. Now, the one saving grace here is there is this gap down here that I've been eyeing, right? Because we know that all gaps, they do get filled. And so I'm like, oh man, as this thing was moving up, I'm like, I wonder when this gap down here is going to get filled, because that's going to suck. And man, the selling in bonds is relentless. This is relentless. The saving grace here is, yes, there's this gap to fill. And man, if, over the short term, right? I mean, this is a lot of selling to continue selling. But just as the old saying goes, markets can remain irrational longer than you can remain solvent, right? So you never want to say things can seem overdone here, because you have no clue. I mean, you have an idea and but setting an expectation is dumb. So bonds, man, I mean, just like I've been saying, we don't want to see things get worse here. And as bonds are selling off, so too are equities going with them. And if this can continue down, I mean, I mean, look at how close we are from like all-time lows. You know, and this would just, if this goes, I mean, look out. The selling will be nuts. Oh, I guess not like all-time lows, but anyways, yeah. So bonds, ooh, sketchy. All right, bonds, and then now, okay, bonds. Yeah. So now let's look at now let's look at real estate. I mean, you guys, like, this is nasty and completely not normal. So again, below the 50-day moving average, and that's when you get out, right? It's like, do you know that this is the end of the bull market? Well, maybe as short-lived as it was in real estate here. Could you predict right here that I was in this trade. I was in this trade right here or something. And boom, below here, I was out of there, you know? Do you know that it's going to go lower? No, you don't. But the chances of it going higher from here get diminished, you know? And so this is just a game of probabilities, having your strategy, sticking to the strategy. And look at this selling. Look at this real estate, you know? So the last bear market, what was kind of the nail in the coffin for me was home builders and real estate, you know? And then it's like, yeah, it's, you know, sort of obvious. Like, this is just so nasty all through here. And it's like, all right, you know, now we know the direction of the market, what's going to be happening. So, now let's look at, home builders. Look at this. This is horrible. Like, this is absolutely horrible. Look at this, home builders. The home builders ETF. The S&P 500 home builders ETF. I mean, how many weeks is this? 1, 2, 3, 4, 5, 6. 5 out of 6 weeks down, and the 1 week it wasn't down, it was still like horrible. You know? I mean, that's a lot, right? This is a month and a half of just violent selling. Like, there's no demand in here for home builders, you know? That should be worrisome. Now, does this mean, again, that the bull market's over? Like, no. But you start watching out. When was the last time heavy selling through the 200-day moving average was continued with selling? What happened? Boom. Here, 2022, bear market. Okay, so again, just not to beat a dead horse, but right here, you know, at the start of 2022, do you know that this was the end of the bull market? No. But it turned out to be, you know, and with following rules, you would have missed all of that. So, okay, there's that. Man. So then we'll go to like healthcare, right? We're saying this has already been rejected off of the 200-day moving average. You know, this broke the 200-day moving average in November. And look at where we are now, right? So you've got home builders, you've got real estate, you've got healthcare all way below the 200-day moving average. You have bonds selling off hard. S&P 500 below the 50-day moving average now. You know, Russell, Dow, been below the 50-day moving average. Like, yes, this can find support, okay? I'm trying not to be super, you know, pessimistic here, and, you know, I have no short position, so so take that with what you will. But this is time to be very skeptical and just minimal. I feel like I've been saying this for a couple weeks now, just like super light, skeptical. Now, let's see. So then, biotech has now been living below the 200-day moving average for a while. It got rejected off the 200-day moving average. Heavy volume, heavy selling. Same thing today. There's another whole sector for you that's just getting smoked. Equal weight S&P 500 getting smoked. Like look at this. This is so many weeks in a row. Like this is tough. 1, 2, 3, 4 out of the last 6 weeks down, and these two again are kind of like so again it's like a month and a half of selling, really. So okay, yeah, and then so you had regional banks today get hammered. They're just trying to hang on. Everything's close. Everything's trying to hang on, right? So now let's go over capitulation and elation. Let's just pivot. So, elation today. Here's a good one for you. Moderna. Oops, mRNA. Here we go, baby. Moderna. 11%, almost 12% today. Why is that? Well, the bird flu death yesterday, and Moderna, they have a vaccine for it, or a shot, depending on if this is gonna, work or not. Right? Is it a vaccine or is it a shot? Nobody knows these days, huh? So, I saw a commercial where they had said, I don't know if they said flu vaccine, but it was something along those lines of like, they were implying that the flu shot is a vaccine. That's hilarious. And then you'll notice today, too, see Pfizer executives descend on Donald Trump's Mar-a-Lago for planning a meeting. And just like I said yesterday in the video, I mean, these guys are donating all sorts of money, and yes, it happened to be Democrats. But again, it's not like these guys are donating all this money to Democrats because they are doing it out of the kindness of their hearts and believe in their policies. No, they're doing it to push their own agendas. So now that, Trump is in power, you see all these tech giants donating all this money now to Trump, right? Like Mark Zuckerberg and all these people, donating all this money to Trump, where, a few months ago, they're donating it all to Democrats, right? So, so here comes Pfizer. Oh, we need a return on our investment. But anyways, so Moderna, somebody dies from the bird flu and Moderna stock is up 12%. How's that one for you there? Would I go after this here? No, because it's below the 200-day moving average, Now, this is sort of rounded and some sort of support, is over the 50-day moving average, but, for me, I wouldn't go after it. So then we'll go to capitulation here, and I guess it's got to be Bitcoin. I don't know what else you would pick. Maybe Bitcoin, maybe Nvidia. Nvidia, this was the worst day. Stock closed Tuesday down 6% after. Oh no, where is this? I saw something where it said this is its worst day in like forever. Nvidia. I don't know. Something like that. Something like Nvidia's worst day for a long time. Let's look at the dollar. That's DXY. Yeah, see, that's looking strong. So, anyways, the plan for tomorrow, let's go over what the plan for tomorrow is. And that is, if NASDAQ goes, I'm out of there. You know, same with Bitcoin for IBIT calls. I'm out of there. We'll see what happens with CCJ. And that's it. That's it. Yeah, so long as NASDAQ can hold this 50-day moving average, that will be the saving grace. But if this starts to roll over below the 50-day moving average, then I will be out. And we'll go over all that tomorrow. See you guys.